Welcome to today's Explainer. Today, we're doing a deep dive into the fundamental, financial, and technical anatomy of a truly unique market leader, Akums Drugs and Pharmaceuticals. We're going to stick strictly to the data, the charts, and management's actual moves to see exactly how they're positioning themselves in this rapidly shifting global healthcare landscape. It's a fascinating setup, so let's jump right in. Okay, I want to kick things off with this absolutely massive number, $71.14 billion. That right there is the projected total addressable market, or TAM, of the Indian CDMO industry by the year 2035. Now, as a quick refresher, a CDMO is essentially a highly specialized manufacturing partner. They develop and make the drugs that other big pharmaceutical brands put their labels on. The entire global industry is rapidly shifting toward this asset-light outsourcing model, and India is capturing a huge chunk of that demand, growing at a projected 10.8% every single year. And here's why that matters for us today. Akums isn't just participating in this boom, they are the absolute largest domestic-focused CDMO in India, both by revenue and by capacity. Think about that. When a market is sprinting toward a $71 billion valuation, the player that's already manufacturing for virtually every top 10 domestic pharma brand is in a prime position. So let's take a look at their integrated business moat. Akums actually protects its market share using this really clever integrated model spread across four main revenue streams. It's like a four-part fortress. First, you have their core CDMO operations for client R&D and formulation. Second, they produce active pharmaceutical ingredients, the actual raw chemicals that make a drug work, which beautifully secures their own supply chain. Third, they do branded formulations. And fourth, trade generics. This end-to-end structure is absolutely crucial because it ensures they aren't relying on a single point of failure. Of course, you don't become the largest player without massive, scalable infrastructure. Akums is currently operating 14 different manufacturing facilities across India, churning out everything from basic tablets to highly complex sterile injectables. But what's really exciting is that they're looking outward. They're actively expanding their European footprint, they've set up a joint venture in Zambia for global reach, and they're heavily leveraging a US NSF-certified facility to tap into the high-margin, high-growth nutraceutical and wellness space. All right, let's open up the books and look at their financial health and margins. This visual perfectly captures their profitability story. The company's profit is scaling right alongside its volume. Just look at that upward trajectory in their EBITDA margins, expanding from 8.0% in FY23 to 11.5% in FY24, with some of the recent quarters hinting at pushing past 12.2%. This is largely driven by a superior product mix and significantly reduced operating losses in their API business. Basically, Akums is keeping a lot more profit for every single product rolling off their lines. Diving into the hard financial ratios, the efficiency metrics are solid, showing return on capital employed hitting up to 14.9% and return on equity up to 8.45%. But for me, the absolute crown jewel of this table is that incredibly low 0.02x debt-to-equity ratio. Following their recent IPO, they're operating with virtually zero relative debt dragging down their equity. That kind of financial resilience is huge. And that pristine balance sheet, that's no accident. It's a direct result of highly strategic capital allocation. They raised 680 crore rupees via their fresh IPO issue, and roughly 387 crore of that was earmarked strictly for paying down debt. The credit rating agencies absolutely love this, rewarding them with an ICRA AA stable upgrade, as their debt-to-operating profit ratio dropped sharply from 2.1x down to 1.2x. Moving right along, let's check out the recent quarterly results and how they stack up against their peers. The recent Q1 FY27 results really confirm the momentum we've been talking about, posting a reported 100 crore rupee profit. But here's the thing, management isn't just sitting on that cash. They recently made a highly strategic 56 crore rupee acquisition of Oriflame assets. This shows us a leadership team that is aggressively reinvesting and expanding capacity to capture even more of that expanding industry TAM we talked about at the start. Now, to really understand Akums' position in the market, we have to contextualize them against the behemoths of the Indian pharma space. So while Sun Pharma sits at a massive 4.66 lakh crore market cap and Cipla is well over 1 lakh crore, Akums is currently valued right around 10,977 crore rupees. I think this perfectly highlights their unique niche. They aren't trying to be a broad pharmaceutical generalist. They are a smaller, hyper-focused giant dominating the domestic CDMO space. Next up, let's follow the smart money and look at shareholding and institutional trust. Ownership data as of the June 2026 quarter is pretty revealing.
Just look at that staggering 75.3% promoter holding. The founders and management have massive, massive skin in the game here. The remaining quarter of the equity is split up between mutual funds at nearly 10%, the public holding 6.7%, and a growing slice allocated to foreign institutional investors.
If we dig just a bit deeper into those numbers, a few major green flags pop up. First off, there is absolutely zero promoter pledging. 0.0%. That means founders aren't using their shares as collateral for loans, which is exactly what you want to see. Second, foreign institutional investors are clearly getting more interested. The number of FII investors jumped from 44 to 67, increasing their total holdings to 1.91%. This actually neatly offsets a very marginal decrease we saw in domestic mutual fund holdings. Finally, let's strip away all the fundamentals for a second and look purely at technical indicators and momentum. Looking objectively at the daily and weekly charts, the technical setup shows very clear momentum. The price is currently trading near its 52-week high of 714 rupees, and it sits really comfortably above both its 50-day and 200-day simple moving averages. Since these averages smooth out daily price noise to show the broader trend, being above them indicates a sustained uptrend. Plus, the RSI is sitting in a healthy mid-range at 62.4, so it has solid momentum, but it hasn't hit an extreme overbought territory where a sudden pullback is guaranteed. All of this rolls up into a moderately strong momentum score of 63.7. So, tying it all together, this brings us to the ultimate question. We've looked at the incredible macro tailwinds, a $71 billion industry TAM by 2035, and we've seen the micro execution, a fortified balance sheet, expanding profit margins, and unmatched domestic capacity with high promoter backing. The question to watch now is, how effectively will Akums leverage this massive infrastructure to capture the ongoing global shift towards pharma outsourcing? It's a genuinely fascinating structural story unfolding right in front of us. Thanks so much for joining me on this explainer, and keep learning.